Brian Manning here. Happy Friday. Another update. So, Monday this week, stocks were certainly moving higher, and all from a verbal agreement in Greece and coming to their bailout with an 80 billion euro bailout in place. And they're trying to make work. And right now, I think people are semi skeptical of everything that's gone on there, but certainly looking like it's going to happen and hopeful that it will, and fingers crossed. So, we'll see what happens, and again, the Greece saga has just continued. Tuesday this week, stocks still tearing up the market. 3-day winning streak for stocks, and certainly looking positive there. Retail sales information came out for the month of June, and a little bit disappointing, but nothing horrible. And also on Tuesday this week, we got CoreLogic giving us some information on mortgage delinquency. So CoreLogic right now says that of all mortgages in the nation, or homes that are owned with mortgages, that any mortgages with serious delinquencies are now down to 3.5%. So a serious delinquency is a mortgage late payment that's 60 days or more late. So, it's just amazing to see how appreciation in the housing market is kind of the elixir and helps settle what was a previously tough housing market. So great to see appreciation, and certainly great to see that mortgage delinquencies are down on a national level. Certainly helpful for everyone. Wednesday this week, we got PPI. PPI is what's called the Producer Price Index, and that measures the cost of goods at a wholesale level. And in June, PPI made a pretty sizable jump. It was up 0.4 or 0.4% for the month of June. And if we look at what's called the core rate, so that strips out the very volatile food and energy, core rate was up 0.3, so 0.3%. So still pretty sizable jump there as well. Today, we get the CPI report, which is the Consumer Price Index. So CPI measures the cost of goods and how inflation is going for us as consumers. And this is a pretty significant jump. Again, CPI for the month of June was up 0.3% or 0.3%. And as we've been saying, this is a modest move higher. Month after month, we've been seeing appreciation here. And right now, year over year CPI, if we look at the core rate, so just like PPI strips out the volatile food and energy, the core rate moved from 1.7% appreciation to 1.8% year over year in the month of June. Certainly on track with what we've been discussing. The Federal Reserve's target of interest rate hikes is really with a year over year core rate at 2%. And we're certainly well on our way there. Month after month, we've been working our way up, and we're 1.8% right now. So definitely closer. Janet Yellen spoke this week and certainly said twice that sees interest rate hike in the near future. They're watching the data carefully, and we'll make some decisions on there. But as unemployment continues to get better for the data they're looking at, employment gets stronger in the U.S., and inflation works its way up to the 2% mark, the rate hike is going to be inevitable. We'll have to wait and see what happens. I will be around all weekend. Would certainly love to be part of your business, help you out with any buyers that you have, pre-approve anyone, please give me a call. Hope you have a wonderful weekend, and I'll talk to you soon.